Tim, thank you for joining us on Capital and Power. And I am eager to ask you about, I guess it's a newsletter, and it's a product that you offer clients where every month you talk about, I'm going to use incorrect language, correct me. I'm not offended to be corrected.
No problem.
The top 10 stocks that are being shorted in any given month, is that accurate?
Not quite, but thank you very much indeed for having me on. So in terms of, yes, we do produce a monthly report and have done for the last couple of years now that provides the top 10 crowdedness. So there's a slight difference between obviously things that are crowded in terms of volume and amount and value. But these are the top 10 securities that are most shorted or have positions of most shorts by the majority of the alternative asset management, the smart money, as it were, who put them on the books.
I'm unfamiliar with this, and I am a novice in many things. There's a difference between crowdedness and crowded?
Yes, in a way, yes. I mean, the two terms can be used indistinguishably, but it is... when you have a crowded score, you can say something's the most crowded in terms of value, but in terms of crowdedness, we use it along the lines of if there are 100 hedge funds who are 99 of them are into a short position on a particular stock, we'd say that's the highest level of crowdedness, whereas the actual value of that stock may not be that large. So I would differentiate the two by saying crowding really is regarded in terms of value, whereas crowdedness is actually the number of hedge funds who are in a particular security.
And how would, in the real world, how as a client would I use that monthly newsletter, the data in that newsletter to my advantage?
There are several ways. I mean, obviously from the sort of the hedge fund side of the street, the quants and the fundamental guys have a view. Crowdedness is one of the major key metrics that they look at in terms of creating the models. But also it does help with regard to any type of investor to know what the smart money are looking at and the potential at some stage of identifying where there's a lot of scrutiny and a lot of pressure on share prices. If something's very, very crowded, there could be pressure on that share price going forward.
So, and as you look at the most recent issuance of it, the November 2025 short side crowdedness report, is that the most recent?
Yes, that is the most recent. We produce at the end of the month. We're actually going to do a year-end one that will cover the entire year after the new year starts.
And what are you seeing that your clients are eager to know?
Okay, well, there are several indicators. Each month is actually quite interesting to see, especially this year, has been interesting to see what sectors everyone is sort of shorting. With particular reference to the November one, we saw that out of the 90 securities that we covered, so we cover 10 securities per large, mid and small cap for the three regions of the world. For all of those, over 45% of them were related to the consumer type of industry. Before, throughout the year, it has been sort of moving from sort of semiconductors to other technical side of things. But in this particular instance, moving to the consumer side has been the area of sort of focus in the November report. And that's been widespread. Sometimes the regions differ, but this time it's been across the board. So you've got people like, in Europe, you've got people like Pernod Ricard and H&M and Campari. In the US, you've got Marriott and Campbell Soup even. Oriental Land and Ajinomoto in APAC. So there's been a lot of focus, and there are many other names as well as part of that group.
But as you see this shift to the consumer side, again, I'm a passive investor. I've done index funds my whole life. It's done me well. I'm not saying others should do it.
Sure.
What is that telling me? I'm probably going to get this wrong, but what I'm hearing is the herd is running towards consumer stuff, which means they might be leaving what has been so popular in tech, but maybe I don't want to run with the herd. I may want to be counter the herd.
It's funny you should say that, because that has been one of the changes that had happened during this year, with all of the confusion and uncertainty, all of the geopolitical things, tariffs, Trump, China, rare earth metals, AI, crypto, all those different. What we're seeing is a slight, what Star Wars aficionados would call a disturbance in the force. So they're usually all of the investors move in sort of like starlings at twilight. They will, if they're really long crowded, and then everyone goes to the short crowded, and the long crowded goes down. They sort of vary with each other. But what we've seen is a bit of a divergence in that, so that there are, for example, you find securities that will be, even of the Magnificent Seven, for example, over a period of time this year, the long crowdedness has gone up and the short crowdedness has gone up at the same time. So there is so you can see, when you compare these crowded scores, you can see where the flows are going. But this last year has been fairly uncertain, whereas previous years it's been fairly traditional.
So again, though, if I see where the flows are going, then it would come down to me, depending on the kind of investor or strategy I have, whether I want to be counter the trend or go with the trend.
Correct. Yes. I mean, that would be down to you. I mean, these are just the top 10. We cover 15,000 global securities, and we cover the physical positions as well as swap positions, which is unique. So, you can go all the way down that number, and you'll see some of the regular names, but they're much lower now in the crowding point. But there is still a lot of pickup in terms of the amount of crowding going on.
Could an individual investor subscribe or pay the fees to get this kind of data from you, or do you have to be a larger office to afford it?
No, we're more than happy to engage with the retail client.
So personally, I want to shift it a little bit, because I make my living in the Mag 7 space, AI.
Sure, sure.
I am curious what you've seen over the year with this flow toward consumer, and what that might mean for people like me, not necessarily investors in AI, but who work in AI, and then for investors in AI.
Right. Yeah. No. So AI has been quite an interesting sort of event this year. It was a great surprise to me to see IBM coming on the top 10 a few months ago. And because it's never been there. For the last few years, mostly it's been Tesla has been sort of stuck at the top of the reports, that I was thinking of hard coding it. But it disappeared from that thing, and it went through the sort of a lot into the semiconductor side of the world, SMCI. But then now we've got IBM in there, and we've got Palo Alto in there. So it seems to me that there is a lot of bets going on with regard to entities that have made big bets on AI, and to whether that will sort of be something that perhaps will be increasing scrutiny, and perhaps not quite as ubiquitously useful as perhaps people might think.
I would, and again, the people who are watching will know that do not take my investment advice. But I mean, I can help you turn $1 million into 10,000 like that. But I would bet the flow toward IBM is that they have such an experience and with quantum computing, which in 2026 seems to be the thing that's going to be of real particular interest to crypto folk and those who need to secure their crypto wallets.
Yes. Yeah. I mean, well, of course, yes. You've hit upon the thing on crypto in terms of the security and tokenization, the security and the regulation, and what's going on there. That we did actually in the report do a little bit of a company expose on Coinbase. That was in the report. So in terms of that, there are loads of other useful metrics that are there. But with getting back to IBM, then yes, it's usually the case that the smart money, when there's been that sort of big bets made, they will pile in and short it just to see how things are going over time.
So what are you expecting? I mean, we're done with 2025. What are you expecting in 2026?
Well, I could come out with the trite usual thing. The only certain thing will be the level of uncertainty, but you never know. It could be uh, uh, machines will learn. AI will be able to predict the unpredictable. Rare earth metals will be discovered with receding glaciers and drying up lakes, and everyone will be able to mine crypto because of all the extra power from all the data areas that are being built right now. But it is an uncertain world. All the geopolitical sort of stuff. I'm actually probably going to see that it might start stabilizing because people will bake in that unpredictable side of things. People will get that, they will take on board the uncertainty there might be, and they may sort of diversify more. They may be perhaps a little less sort of heavy betting on everything until they're absolutely certain.
When you see the data that your firm is aggregating for its clients, do you ever get worried?
Um, No, I've had a lot of experience in data over the last too many years, couple of 3 or 4 decades, I guess. And sometimes you tend to get a bit, well, gosh, what's going on here? And then everything shakes up like a snow cone and one of those snowball things, and then it all settles down again. Um, I mean, I've people get worried about shorting and all that sort of good stuff. It is a very elegant, self-correcting sort of type of system in the capital markets area. Because if people short because they think something's overvalued, they carry on shorting. They hold that short position. They borrow securities or from institutions to maintain that short, and then the price goes down, the institutions sell their shares, and then they force the hedge funds to buy them back, which increases the price again. So it's an incredibly elegant way of doing it. What usually goes wrong is when governments interfere, to be brutally frank.
So, any predictions based on your personal experience for 2026? Everybody likes to say
I
where we're
know.
headed.
Well, I am like yourself. I could lose a lot of people a lot of money if they take what I say as gospel. So I have no intention of providing investment advice. Um, but I would say that just keep looking at our top 10 and you'll be pretty well guided.
Anything you'd like to add?
Um, think there's any other stuff that I would only add would be that, it is, um, it is a changing market. The ecosystem is changing. Access to this data is becoming more widespread. And there used to be a sort of a dichotomy between the sort of the wholesale institutional side and the hedge fund side. The whole market is sort of turning and metamorphosizing, and the data is flowing from one side to the other, and people are getting access to a lot of things. So I think it's actually going to be a good way for people to get into and get the information they need to do what they want, as well as the so-called smart money do it.